Hey everyone, this is Frank with your Pivot Boss Premium Market Outlook for the NQ for January 30th, 2015. We're heading into the last trading day of January, and basically prices have coiled within a very clear trading range throughout the month. Very, very nice range. We've seen bears do their job and return price from the top of value and return it back to value, followed by moves into the bottom of value. And we've seen that several times. 1, 2, 3, 4, 5, 6 passes back and forth. The bulls have held up their end of the bargain, returning price back up several times. And now coming into Thursday's trading, bulls were able to defend prices below value and 4,100 and return them through 4,158 and higher, coming into 4,200. So that was a 100-point reversal here from 4,100 back to 4,200, all based off of our key range. As we've noted before, we've had bears on the top end defending for shots lower. We've had bulls on the bottom end defending for shots higher. And what that's creating is a trading range here that now has a lot of energy built into it. There are lots of buy stops above. There are lots of buy stops below. And once you get expansion in either way, you're likely going to see a significant trending move for the next several months. This could be a 6-week to 9-week trading range type of move, breakout, and it could actually persist longer than that. So it could be a very significant move. This is the first time in quite a while where we've actually held on to gains at highs, developing a fairly large range. I mean, we haven't had a range of this magnitude since we saw the 3,400 range, where prices rallied from 3,400 for several months straight up once prices were able to see expansion. So this is the first significant range that we've developed since then, and this could lead to another major multi-month move. The first move can be anywhere 6 to 8 weeks, and then from there you're likely looking at a 12-week move perhaps out of that range. The reason I say that is because it's all about measured moves, it's measured distances, measured times. This trading range right here is about 3 months wide, which means once you start to see expansion, you're likely going to see 3 months of trending movement in the direction of the expansion. So it could be significant what we see here in the days, weeks, and even months ahead. For now, we got to continue to watch the trading range and the areas of value and over and undervalued areas. It's bulls will be looking to defend a pullback to between 46 and 58 for a shot at 42.12 and 42.72. Bears will continue to defend prices at the midpoint of the range at 42.12 for a shot at reclaiming 41.58 and pushing prices back to 4,100 and below. Now, if we look at the intraday time frame, again, very similar to what we talked about with the ES. We had a very quiet trading range that developed early in the session. This trading range right here was tightly coiled with lower highs and higher lows, and eventually the break occurred in the afternoon. Once the break occurred through the upside, throw on your moving averages here, and you can see that all pullbacks into the trigger zone led to very nice bounces overall to new highs. Every single one led to new highs. And the idea behind this is my PIMA pullback. It was from the free ebook that I had a long time ago, and basically this is just a standard pullback to the moving averages. The trigger zone is the distance between the fast and the middle moving average, and then the slower moving average is there as a trend modifier. They're just basically keeping the trend rather. And what you're wanting to do is buy the dips. Buy the dips. That's it, right? And then you look to take profits somewhere at a new high. That's all it is. And very, very nice approach, especially after expansion. It's something that you can look for every single day in any instrument you trade, whether it's ETFs, stocks, futures, what have you. Watch for coiling up behavior. Once you see confirmed expansion, look to trade the pullbacks in the direction of the break. All right, now in terms of short term, what to look for, we got to keep an eye here on 5-day value, the prior value here, and then the shift down of 5-day value. So prior value was here at 41.89. It shifted down to 76 and went bid short term. That's bullish, and that implies a move likely back toward 42.33 half, which is a key level. Bears will want to defend that key level, and bears are going to want to defend any prices at 42.12 for a shot back at 53 half and lower. All right, that's it for now. Let's see how this thing plays out heading into Friday's trading. Good luck and trade well.